No, I'm not a writer.
Okay.
Give up on my way home, yeah. Wouldn't it be crazy? Don't you still amaze me?
How you doing, traders? Welcome back to Boom and Crash Guru channel, Boom Crash GFS channel. A must to appreciate the subscribers to this channel. You are the best and you will ever remain the best. And if you're new to the channel, do well to click on the red button, subscribe to the channel and turn on the notification bell for you not to miss out on every trading tips, trading analysis, trading tricks videos that will be shared with us on this channel. Basically, a video was shared with us last time, trading analysis over a particular structure that actually played out on a pair Crash 1000. I believe we all delved into that market and made that profit. We were instructed to buy Crash 1000 as a structure, head and shoulder structure played out on that particular pair, and we were instructed and shown the analysis telling us to buy Crash 1000 to a particular target. I believe we all followed and bought the pair and made that profit, as it is vividly displayed on the screen. How the market played out, we can see clearly that we eat up that target and we made that dough. Therefore, we are enjoying on this channel every time trading analysis, trading tips, trading tricks is being shared on this channel. Do well to follow accordingly and learn and learn. As for that, so what are we looking into today? What we are looking into today is basically how we can trade head and shoulder structure in the market. How head and shoulder structure really form in the market. Things we are to look out for regarding head and shoulder in the market, the target, and how we can measure our target while trading with head and shoulder pattern in the market. So traders, fasten your seatbelt as I take you on a ride on how we can trade head and shoulder in the market. Let's move. We are traders, so this is our talking points. We are going to be looking at what is head and shoulder patterns, how can we identify head and shoulder patterns, and also what are the advantages and the limitations to head and shoulder patterns. Quickly, what is head and shoulder pattern? Investopedia let us know that head and shoulder pattern is the chart formation that appears as a baseline with 3 peaks, where the outside 2 are close in height and the middle height. So what is it? This telling us? It's telling us that as for this chart formation, it has 3 peaks, whereby we have the left peak, the middle peak, and the right peak. These are 3 peaks. It's telling us that 2 peaks are of the same height, both the left and the right are of the same height, and with one in the middle, which is the highest of all, which is termed the head and shoulder pattern, standard head and shoulder pattern. And on the other way around, whereby we have the reversed head and shoulder pattern, which is called the inverse head and shoulder pattern, whereby we have it turned upside down. We have the left and we have the head. One thing we should know, guys, that this chart pattern is a reversal pattern, is a reversal formation telling us that a particular trend is coming to an end and there is a new trend coming in place. And in a simple definition that we can put it into as for the standard head and shoulder pattern is a chart pattern which is used in technical analysis to actually predict a bullish to bearish trend reversal. And as for the inverse head and shoulder, we can take it to be a specific chart formation that predicts a bearish to bullish trend reversal. So in a nutshell, a head and shoulder pattern is a technical indicator with a chart pattern of 3 peaks, where the outer 2 are close in height, are of similar in height, and the middle, which is the head, is the highest. Also, a head and shoulder pattern considered as one of the most reliable trend reversal pattern. It is a chart formation that predicts a bullish to bearish trend reversal. And the other way around, which is the upside down formation, which we call the inverse head and shoulder pattern. This actually predicts a bearish to bullish trend. Understanding the head and shoulder pattern, this head and shoulder pattern actually has 4 components which we have to put at the back of our mind. Let's go into the chart and see a typical example of head and shoulder pattern. So here we are. So looking into these 4 components of head and shoulder pattern. So after a long bullish trend, a long uptrend, the price rises to a peak and subsequently declines to a low. Secondly, the price rises again to form a second high substantially above the initial peak and declines again. Here we see the price rises above the initial peak, which we have here, and see that the price actually decline again to that particular low. And thirdly, the price rises a toe time, it rises to the same level, to the first peak level before it now gets declining. We have the neckline in place, which is actually drawn at the two lows. These particular lows. We have the left shoulder, we have the head, and we have the right shoulder. So this is a typical example of a standard head and shoulder pattern. Having these 4 components in place, we have to take note of these 4 components. Looking at after a long uptrend, a bullish trend, the price actually rises to a particular peak, which we have here, and subsequently after that declines to form a low, and thereafter rises again above the initial peak we have here. It rises above the peak and then fall back again. Then we see the prices actually rises to the peak, but rises to the peak which is similar to which on the same level to the initial peak level. Then we now see the price actually falling down. So there we get our neckline by drawing a trend line from these 2 lows. So this is a typical head and shoulder pattern, and as for the opposite way around, it's actually formed in the same manner, but the thing is that as for the inverse head and shoulder, it is inverted with the head and shoulder bottoms used to predict reversal in downtrend, while the standard head and shoulder actually used to predict the reversal in uptrend. So what exactly does this pattern actually tell us? What does head and shoulder pattern tell us? The head and shoulder patterns actually indicate reversal is possible. Simple as it is. It's telling us that reversal is coming into place. That's what head and shoulder actually tell us. So going straight to the advantages and the limitations to head and shoulder patterns. Firstly, one advantage of head and shoulder pattern is experienced traders identify it easily. When it comes to head and shoulder pattern, the number one advantage is that the experienced traders identify it very easily. And another thing is that it has a defined profit and risk. Yep, looking at head and shoulder pattern, it actually has a defined profit and risk. It gives us a very accurate risk to reward ratio. And trading with head and shoulder pattern, how can we tends to pinpoint our target in the market? It's very simple. The only thing is that we just have to measure the distance of the head to the neckline, the distance of the head to the neckline. So after measuring that, we can actually use that for our target. Very simple. As we can see, basically we get this accurate defined risk to reward ratio, and here is our target, which is very accurate. So one of the advantage of this is that it has a defined risk and profit. And another advantage is that big market movement can actually be profited from. We can actually be profited from a big market movement when it comes to this chart pattern. And another which is very good advantage of it is that it can actually be used in all markets, be it stock, be it currency, be it indices, what have you. You can actually make use of this reversal pattern in your technical analysis. So going straight to the cons, disadvantages, limitations to head and shoulder pattern. Number one of it is that novice traders may actually miss it. It is kind of difficult for novice traders to point out head and shoulder pattern in the market. And another thing is that very possible to put out large stop loss, distance of large stop loss due to the nature of the pattern. So basically these are the pros and the cons to head and shoulder pattern. And once you know about this pattern, it is actually good to trade with and indulge in our technical analysis. It's a very beautiful reversal pattern in which we all can actually learn and actually make more profit out of it. So that's that for that. I believe we all have learned one or two in that video. We are talking about head and shoulder pattern, the other way around, which is the inverse head and shoulder pattern, the components involved, and what head and shoulder is actually telling us. Basically, head and shoulder is telling us that reversal is actually possible because this is a reversal pattern. And that's it, guys. Thank you so much for watching and staying tuned to this channel. For the subscribers to this channel, you are the best and you will ever remain the best. And if you are new to this channel, kindly hit the red button, subscribe to this channel, click on the notification bell for you to receive notification anytime the video will be shared with us on this channel. So until next time, I come our way. Bye.